Dear investor, I'll share a real-time experience of investing in a stock market and the common mistakes we all make as an investors. Uh, the first time investors get into the market, either by their friends approach them, or some of the brokers or marketing guys approach them, or you have unsolicited calls, SMSs, and etc. You get into that, and they give you basically they make you excited by saying, no, you will get a lot of return in the market, and this is how you land up into the stock market. There are very few who have a plan and they are informed guys, and they think that they follow the discipline and they make the money. So what are the common mistakes we make in the while investing in the stock market? Often, the retail investor, they think that, the stock market, we can make a fortune out of it. It's true, but it's false also. If you follow the discipline, you can definitely make a fortune out of it. However, perhaps both are true. If you try to be greedy, you will turn out to be a bankrupt. And if you follow the discipline, you can make money out of it. Let me share you an interesting fact. The 90% of the investors, or the people who is trading the stock market, they lose money. Only 5 to 10% they make money. So why do we all lose money? And whomsoever you talk, you will find the majority of them are basically in the category of losing the money. Obviously, they will not disclose you, but that's a fact of it. Fact about it. I have no regret of admitting, or I'm not shy of admitting that even I have lost a lot of money in the market. However, over a period of time, I learned learned from my mistakes. I burnt my finger and learned from my mistakes, and I basically took corrective actions. And after that, I'm really doing good, and I'm confident of basically making money in the stock market. So let's talk about why do we lose money in the market. There could be many ways we lose money in the stock market, but I summarize this basically two major categories wherein we lose the money. By following that kind of practices, we just lose the money. The one is when you are new to the market, basically you want to make quick money because somebody has told you that stock market gives you a very quick money. So what you do, you try to buy a beaten down stocks or the penny stocks, which you think that this share of 1,000 rupees has already beaten down to, let's say, 100 bucks. So if you buy it, at least it will turn double and you can make a lot of money. The second is you buy a penny stock. And then in the penny stock also you think, because it's only 2 rupees, 3 rupees, how much time will it take to get it double? So you buy the truckload of those kind of penny stocks. Then the moment you buy, it's possible that you make some 5-10% of profit, and you got out of it. So generally the investors, what they do, wherever they make the profit, they just get out of it. But wherever you make losses, you try to carry it over. So in this case, let's assume that you made some losses, and to cover it up, what you did, you average it out, and you keep doing it. So stock is continuously going down, and you have been averaging it out without even knowing that why the stock is going down. So you have no clue about it. All you think that one day the stock will turn up positive and it will start flying, and that actually it never happens. And one fine day you will have a news that company has gone for a bankruptcy, and finally you lost all your money. So, and the second is people get into the FNO. So while you want to make a very quick money, what you can do is in a FNO, that is future and option, you pay, let's say, 20% of the margin money and you buy 100% of the equity. So let's say if you buy 10 lakhs worth of equity, you pay 20% upfront margin to the broker, and you buy a future for that particular month. So let's assume that you bought a future of 10 lakhs rupees by paying 2 lakhs rupees as a margin money. This future and option has to be settled every month. So let's assume that you bought it and you made some 2-3% profit. So 10 lakhs of 2-3% of 10 lakhs is basically gives you quite a handsome return, 20 to 30,000 bucks. So what you do, you just quickly get out of it so that you made the money. Then what you do, you become a greedy, and then you try to play again. So you enter into another script, you buy that stock again in the future an option, and that this time what you do, you lose money. So let's say you bought at 100, now the stock is trading at, let's say, 97 or 98. So let's say roughly you are making some 30 or 40,000 rupees of losses. Now at the end of the settlement cycle, you don't want to basically accept that you have made a losses, or you don't want to book it. So you have two options: either you take the delivery or you carry it forward. And the third option is that you book the losses and get out of the escape. Most of the people and most of the retail investor like us, what they do, they basically either carry it forward or they try to take the delivery. So let's assume in this case you carried it forward. So you are already lost 30%, you pay some 4%, you pay some additional margin money to the shortfall, to meet the shortfall of 20%. And in the next session, let's assume the stock has fallen another 10%. Okay, and now basically 10% of 10 lakhs becomes 1 lakh rupees. Now you basically, whether you don't want to carry it forward, because in F&O you pay some the monthly the charges to basically get into the F&O. So what you do, you take the delivery. So you take the delivery, and because you have made losses, to make good of your losses, you try to buy the same stocks some more quantity, and you keep doing it. So every time the stock has been falling, once you have taken the delivery, you have been buying even those stocks, and slowly you are averaging it out over a period of time. And now, because you had started the business, the investing in only with 2 lakhs rupees, now you have land up owning, let's say, 20 lakhs of equities of the same scripts, and perhaps you have to break your fixed deposits, you have to borrow some money, and then still you are not stopping, because every day the stock is going down and you're trying to average it out in order to basically make it what we call it the reasonable enough that the price will bounce back and you perhaps recover all your money. Many cases it never happens. When the stock is going down, there are some reasons. Me and you do not drive the market. There are big players in the market drive the market. We'll discuss all this about big players and who drives the market, how the market is driven in my next sessions, slowly and steadily, one by one. So let's assume that you don't have a lot of knowledge about the insider information and the market information, and somebody else is driving. So if you don't have the information, don't try to average it out, at the lower level. There is something wrong with the company which you don't know. Okay, so when you don't know, please don't get into that. Simply get out of it. But you don't do it. So most of the investors, they don't do it, and they land up losing the money in this way. So the recent example, 2019, will be remembered for, the biggest of the corporates have fallen back. The one of the recent example, some of the example is Arcom, Reliance Communication. You see Yes Bank, DHFL. Reliance Communication in 2005, it used to be of 900 rupees of a share, which is today is around 2 rupees of shares. There were one of my friend, he was basically buying Reliance Communication for the last 6 years when the price was roughly around somewhere 150 to 200, and he was continuously averaging it out. And you'll be surprised to see basically that he put his 1.7 crore in Reliance Communication alone, and finally, the fate of Reliance Communication, what happened. The company has gone for bankruptcy, and and it's all under the NCLT. It's filed for bankruptcy, and basically the company is closed, bankrupt. So basically, the share price of that company is, let's say, 1.25 or 1.5. So you lost all the money. Same thing happened with DHFL. Same thing happened with Yes Bank. Yes Bank, 1.5 years back, from 450 rupees, it came down to recently 10 rupees. And when the Yes Bank was cracking down from 400 to below 400 to 300 and 200, lot of retail investors were buying in a truckload, where the institutional investors and the financial institutional investors and those who had inside information, they were all selling their stocks. Though the Yes Bank was rescued by RBI, other two has gone for, the file for the bankruptcy. So I mean to say is, these are the ways you lose money. Basically, you should be a little smart. The stock investing is not a very rocket science. It's a common sense and little bit of research, little bit of analysis. Please do not follow the unsolicited calls, SMSs, the TV news and the medias. So while there is you can hear to something or the advice, you always apply your brain to basically whether to buy these stocks or not. So basically, I'll wrap up this today's session, and then I'll tell you. So, what are the lessons learned from this investing when you are a first-time investors? So, the lessons learned are: never buy a share which is in a downtrend. Unless that share is a very good share. The company has been doing extremely well over last 10 years or 20 years. So still in that case, let's say for example, you buy a share at 2,000 rupees, okay, and that share has cracked by 10%. How so, and how good that company is? If it has gone 10% down from your entry point, please get out of that stock. Revisit that stock once it settles it out. Once it further goes down or it settles it out, it makes the base, and then it starts little moving up. And then you try to, if you want to re-enter, you re-enter into it. But never try to average the stock when it is in a downtrend. Always try to average the stock or buy more quantity of the same scripts when the stock is moving up. That's where you will make money. Never put all your eggs in a one basket. Don't try to buy truckloads of the equities of one single scripts just because it's cheap or you like it or you made losses. Please, there is a common basically psychology of individual investor that if somebody has made a loss in a particular script, they will try to recover that loss from the same script by buying more quantity and by trading in trading in that same stock over a period of time. Never follow tips and unsolicited calls. These tips and unsolicited calls can simply ruin you. These tips and unsolicited calls, how it works is, let's say you circulate a message to 100 guys to buy a particular stocks, and you send the same message to 100 guys to sell that particular stocks. So this is how there are people in the market, the plays with the retail investors. Do some basic research before you buy any script. Just do not get into the script just because somebody has suggested you, whether it is your closest of the friend, your financial advisors, if you have even seen on the TV medias, please use your brain, do some little research. We'll talk about it. What are the indicators? What should you see? How do we basically analyze a stock? All this we'll discuss in my subsequent sessions one by one. And the idea is to basically educate investors and do not let them lose money the way I have perhaps lost the money. So I have made a mistake. I do not want you all to make a similar mistakes. With this, I end this session. We'll meet up in the next session where I'll teach you some golden rules of investing and the principle we follow. My name is Sanjeev Gupta. You can, my email is given in this, the end of the session video. You can contact me if any of the help required or any of the clarification required. Thank you. Namaste.